develop unshakable discipline, and achieve emotional neutrality, the state where trading becomes fluid, focused, and free from the noise of doubt and fear. What you'll discover here goes far beyond the charts. You'll learn how to take full responsibility for your results, how to build confidence that isn't shaken by a loss, and how to stop forcing trades just to satisfy emotional urges.
It's good,
You'll
y'all.
discover how to trade without fear, without hesitation,
We got
and
today.
without the need to be right. And most importantly, you'll learn how to develop a mindset that thrives in uncertainty. A mindset that is not just essential for trading, but for any arena where performance meets pressure. Because whether you're navigating the market, building a business, or simply trying to make better decisions in life, the ability to master your emotions is the difference between failure and lasting success. So, as we dive into each section of this journey, I want you to reflect deeply, not just as a trader, but as a person. Ask yourself, do I truly believe I deserve to win? Or am I subconsciously sabotaging myself every time I get close? This isn't just a video about trading. It's about becoming the version of you who stops guessing, stops gambling, and finally steps into consistency and power. Let's begin. Section 1. The Myth of Market Prediction. One of the most dangerous illusions in trading, the one that silently drains accounts and shatters confidence, is the belief that you must predict the market to be successful. It's an idea that seduces new traders and even experienced ones alike, that with enough research, news analysis, or the perfect combination of indicators, you can figure it out, see the move before it happens, and ride it all the way to profit. But here's the harsh truth. You don't need to predict the market to make money consistently. In fact, trying to predict the market is one of the main reasons so many traders fail. The market is not a puzzle waiting to be solved. It is a sea of probabilities. And if you approach it with the mindset of needing to be right, you will eventually be crushed by the waves of uncertainty that are an inevitable part of every trading day. Mark Douglas, in Trading in the Zone, makes it clear. Consistent success comes not from certainty, but from embracing the uncertainty of each trade. The need to be right is rooted in ego, in fear, and in our deeply conditioned belief systems. From childhood, we are rewarded for being correct. In school, getting the right answer means praise and advancement. In society, making accurate predictions earns you credibility. But in the market, this mentality becomes your downfall. The market doesn't care how smart you are or how much you prepared. It doesn't reward the right prediction. It rewards discipline, patience, and the ability to manage risk within a structured system of probability. Consider this. Casinos make billions every year, not by predicting every hand of blackjack or every spin of the roulette wheel. They make money because they have an edge, a small statistical advantage over time. They don't need to win every round. They don't even need to win the majority. They just need to stick to the process long enough for the odds to play out in their favor. The same principle applies to trading. Your job is not to know what will happen next. Your job is to identify a setup with a favorable probability, execute it with discipline, and manage your risk. Let's look at a real-world example. Take John, a passionate and intelligent man who decided to pursue day trading after watching a few online success stories. He read books, joined forums, subscribed to market newsletters, and spent hours each day trying to interpret news headlines and economic data. He believed that if he could just stay ahead of the news cycle, he'd always be one step ahead of the market. But despite all this effort, his account kept dwindling. Sometimes he was right, but more often he was wrong. And when he was wrong, he didn't know how to respond. He'd freeze, hesitate, or double down on a losing trade in an attempt to force a turnaround. The stress was unbearable, and eventually After blowing 2 trading accounts, he was ready to give up. That's when John stumbled upon trading in the zone. It flipped his mindset upside down. He realized he wasn't failing because he lacked information. He was failing because he was obsessed with being right. He was addicted to the illusion of control. Slowly, John started shifting his focus. Instead of predicting, he began defining a clear set of criteria for his trades. He learned to treat each trade as a singular event with an uncertain outcome, but one that, over a series of similar trades, could yield consistent profits. He stopped asking, "Will this trade work?" and started asking, "Does this trade meet my rules?" With that shift, his confidence returned, not because he was always winning, but because he finally had a framework that freed him from emotional chaos. The result? Steady growth, fewer sleepless nights, and a calm he never thought possible as a trader. The core message here is this: you can be wrong and still make money. The goal isn't to win every trade, it's to manage your losses and let your winners run according to your edge. This shift requires letting go of the need to predict, letting go of the need to be right, and embracing the unknown. It sounds simple, but it's not easy, because it goes against everything we've been taught. It requires humility. It requires surrendering your ego. And it requires a mindset that values process over outcome. So, how do you apply this practically? Start by defining your edge. What is your setup? What conditions need to be present before you enter a trade? Write them down. Back test them. Make them simple enough to repeat. Then, take a series of 20 trades where your only focus is on following the setup and managing your risk, not on the outcome of each individual trade. Track your performance, but more importantly, track your emotions. Were you anxious? Did you hesitate? Did you break your rules? These are the true indicators of your growth. Next, detach emotionally from the result of a single trade. One trade means nothing. Think in terms of probabilities, not predictions. If your edge has a 60% win rate, you will still lose 4 out of 10 trades. And that's perfectly okay. Learn to take a loss as a normal part of the process, not a personal failure. When you stop needing every trade to be a winner, you unlock the freedom to trade without fear. Ask yourself honestly, can I commit to trading without needing to be right every time? That's your challenge. Let go of the fantasy of market mastery and step into the mindset of a professional, one who understands that the market is never wrong, only unpredictable. But with structure, discipline, and emotional control, you don't need to predict. You only need to play your edge with consistency. In this first step toward trading in the zone, you're being asked to unlearn what the world has taught you about success. Being right is irrelevant. Being consistent is everything. Remember, the market doesn't reward those who know. It rewards those who act with clarity, regardless of uncertainty. So breathe, let go of the need to know, and step into the mindset of a probability thinker. That's
20
where your power
seconds.
begins.
We've got equal highs.
Section 2. The
Show my
role of
targets for
beliefs
the
in
morning.
every decision you make in
London
the
highs and
market.
pre-New York
Whether
highs.
it's hitting the buy button, exiting too early, or hesitating just
Let's
long
see what we
enough to
get
miss a
open. We've
perfect
hit the
setup,
Asia extension
comes
right
from
now,
a
so
place deeper than strategy or
let's see how
logic.
we open.
It comes
Okay.
from your beliefs. Mark Douglas, in Trading in the Zone, emphasizes this truth.
Like I'm going in.
Our beliefs shape how we see the market, how we interpret its movements, and most importantly, how we react under pressure. Trading isn't just a game of probabilities, it's a mirror reflecting your inner world. And until you become fully aware of the beliefs you carry about money, risk, loss, and success, you'll continue to repeat the same destructive patterns, no matter how much technical knowledge you gain. Think about it. Two traders can look at the exact same chart, same indicators, and same price action, and yet make completely opposite decisions. Why? Because their beliefs filter the information in front of them. One sees opportunity, the other sees danger. One believes the market is a place of abundance, while the other believes it's a battlefield rigged against them. These beliefs act like invisible lenses, shaping perception and driving behavior without us even realizing it. And when those beliefs are rooted in fear,
That's
scarcity,
cool.
or past trauma, they become massive roadblocks to consistent performance. This is why some traders seem to sabotage
Break
themselves
even at
right
this
when
point.
success is within reach. A trader
Into
may
partial
execute
reversal.
trades flawlessly for weeks, only to suddenly take an impulsive, oversized trade that wipes out their gains. On the surface, it seems irrational, but deep down, they may carry a belief like, I don't deserve to win, or if I make too much money, something bad will happen. These limiting beliefs don't just affect how you
Quick one.
trade,
Oh my god.
they dictate whether or not you can hold on to
So
success. Take the story of Maria. She grew up in a household where money was always a source
I'm
of
older.
tension. Her parents constantly argued about it, and she often heard phrases like, money changes people, or rich people are greedy. As she grew older, Maria worked hard, got educated, and eventually discovered trading as a way to gain financial freedom. She studied tirelessly and developed a
We're gonna
solid
be
trading
taking
plan.
passes at the premium
But every
price.
time she started to make real progress, right when her equity curve began to rise, she would take a random trade with no setup or skip trades that met all her criteria. Over time, she found herself stuck in a cycle of self-sabotage. No matter how much she learned, her results never improved. It wasn't until Maria began working on her belief system that everything changed. She realized she had unconsciously linked
It's
money
about
with
2 minutes
guilt
in this
and
candle.
fear. In her mind, making more money meant betraying her values or becoming someone her family wouldn't recognize. Once she brought those hidden beliefs into the light, she was able to reframe them. She replaced money is bad with money is a tool for freedom and contribution. She shifted from shame to empowerment. And as her beliefs changed, so did her trading behavior. She began executing her plan with confidence and letting go of losses without emotional fallout. For the first time, she felt in control, not of the market, but of herself. This is the power of belief work in trading. When you
Close the
work your
new day opening
beliefs,
gap as
you don't
well.
just change how you think, you change what you do. You start seeing
So
opportunities where you once
relevant.
saw fear. You stop hesitating and start trusting. You detach from the outcome because your self-worth is no longer tied to a win or a loss. Instead of trying to force the market to give you what you want, you begin flowing with it, knowing that your mindset is your true edge. So how can you apply this practically? Start by taking a hard, honest look at your current beliefs. Ask yourself, what do I believe about money? About success? About losing? About risk? Write your answers down without judgment. Do any of these beliefs sound like, I'm not good with money? If I lose, I've failed. Success always slips away. Or, I'm not meant to be wealthy. These are not harmless thoughts. They are the root of hesitation, overtrading, revenge trading, and even burnout. And they must be challenged. Once you've identified your limiting beliefs, begin to replace them with empowering ones. But don't just say affirmations. Anchor them in experience. Find proof in your life or your trading journal that supports your
Let's see
new
what we do at the
belief.
midpoint now.
If you want to believe, I can be a consistently profitable trader, go back and look at the trades you executed well. Use them as evidence to reinforce that identity. Beliefs become strong through repetition and emotion. So write, speak, and feel your new beliefs every day until they become second nature.
I think SPX
Another
going up to
powerful
the previous
exercise
daily
is
high.
visualization. Every morning before you trade, visualize yourself executing your plan with complete calm and confidence. See yourself handling a loss with grace, sticking to your risk management, and walking away from the screen at the right time. This mental rehearsal conditions your subconscious to believe in that version of yourself, and eventually your actions will begin to match. Also, surround yourself with voices and environments that support your growth. Follow traders who lead with discipline and humility, not just flash and ego. Engage in communities that talk about mindset as much as strategy. Read books, watch videos, and consume content that helps you build a belief system rooted in abundance, trust, and resilience. Here's the challenge for you. What is one belief about trading or money you know is holding you back? Say it out loud. Write it down. Then write its opposite, something that empowers you. For example, if your limiting belief is, I always mess up under pressure, flip it to, I stay calm and follow my plan, no matter what. Keep that new belief in front of you every time you sit down to trade. The more you focus on it, the more it becomes your truth. Trading is never just about the charts. It's about your internal world. If you don't believe you can succeed, no strategy will save you. But when you build beliefs that support your growth, you unlock a version of yourself capable of achieving consistent success, not just in trading, but in every area of your life. So take this seriously. The market will always reflect your mindset back to you. If you want better results, change the lens through which you see the market. And that starts by transforming the beliefs you carry within. Section 3. Thinking in probabilities. If there's one mindset shift that separates professional traders from those who are constantly stuck in cycles of frustration and inconsistency, it's the ability to think in probabilities. The market is not a machine that rewards precision or prediction. It's a vast and ever-shifting sea of possibilities. No trade is ever guaranteed, and no setup, no matter how perfect, can promise an outcome. This is where most traders go wrong. They expect certainty in an environment that is inherently uncertain. They take one loss and suddenly doubt their strategy. They win and think they've mastered the market. But the truth is, each trade is just
Triangle
one
choo
event
choo.
in a much larger series. It's only when you start thinking like a casino, focused on long-term edge and odds, that you begin to unlock consistent results. Mark Douglas, in Trading in the Zone, drives this point home with clarity. Successful trading is not about being right all the time. It's about managing risk and executing with consistency. Imagine flipping a coin that has a 60% chance of landing heads. You might flip tails once, twice, even 5 times in a row. But over 100 flips, the probabilities will play out, and heads will show up around 60 times. That's your edge. That's what matters. Yet most traders treat each trade like a test of their skill, intelligence, or intuition. They tie their identity to the outcome. And when the result doesn't go their way, they spiral emotionally. This emotional roller coaster, hope on one trade, fear on the next, followed by hesitation or revenge trading, is a direct result of not thinking in probabilities. When you see every trade as a singular event that must work, you set yourself up for disappointment and overreaction. But when you truly understand that your strategy only needs to work over a series of trades, you can finally detach from the need for every trade to succeed. That detachment gives you emotional freedom, and that freedom is what allows you to execute with discipline, regardless of the last outcome. Let's use a real-world example. Casinos. Casinos don't care about individual outcomes. If someone wins big on one hand of blackjack or hits the jackpot on a slot machine, the casino doesn't panic or change its system. Why? Because the casino knows the math. It knows that over thousands of games, its edge will guarantee profits. One player might walk out richer, but the house always wins in the long run. They have systems, they have discipline, and most importantly, they have faith in their edge. This is exactly the mindset a trader must adopt. Picture yourself as the house. You have a system that gives you a small advantage over time, a setup that, when followed, wins 55% or 60% of the time. Not every trade will work. Some will lose. But if you stay consistent, if you manage your risk, and if you execute your plan without emotional interference, the edge will show up. Your job isn't to win every trade. It's to stay in the game long enough for your edge to play out. That's the essence of probabilistic thinking. So, how do you start thinking in probabilities? First, accept uncertainty as a permanent condition of trading. Let go of the need to be right. Every time you take a trade, remind yourself, this trade could win or lose, and either outcome is okay. Stop treating a loss as a failure. Start seeing it as a necessary part of the game. Just as a casino accepts payouts to winners, you must accept losses as part of doing business. There's no room for shame or panic, just execution. Second, track your trades, not to evaluate each one individually, but to study the patterns over time. Look at 20, 50, or 100 trades. Ask yourself, are you following your rules? Are you managing risk consistently? Are you reacting emotionally or staying neutral? The goal is to evaluate your process, not just your profit. A good trade isn't one that makes money. It's one where you followed your system perfectly, regardless of the outcome. Third, define your edge clearly. What are the conditions for your entries, your exits, your risk management rules? Put them in writing, test them, refine them. But once you've proven the edge, trust it. Don't second guess yourself after a loss. Don't change your system because of temporary drawdowns. If your setup has a proven probability, the key is repetition. Trade it again and again and again, because only over time does the edge reveal itself. One of the best exercises you can do to build this mindset is what I call the 20 trade challenge. It's simple, but powerful. Commit to taking 20 trades in a row using your exact rules without changing
Morning, bro.
anything based on the outcome of the previous trade. Whether you win or lose, you keep executing the same way. At the end of 20
I
trades,
already
you'll
got
know your
buys on US
results
30 this
and your
morning.
emotional state.
That's crazy.
You'll
It's
likely
so like
find that
fast.
your edge played out and that you were far more calm and in control than when you let your emotions dictate your decisions. This exercise trains discipline. It builds
What?
trust in your system, and it forces you to stop seeing trades in isolation. It's a stepping stone to developing the trader's mindset, one that operates on logic, not emotion. Now, here's your challenge. Can you take 20 trades with the same rules and not change them based on the last outcome? It sounds easy, but when real money is on the line, the pressure kicks in. That's where growth happens. If you can learn to take
US
each
30
trade
is
without attachment,
in
without
third right now.
fear,
Wow.
and without the need to win, you'll rise above
Gotta
the
love
90% who are constantly reacting and chasing the market. Remember, every time you take a trade, you're flipping a weighted coin. You don't know which flips will land heads or tails. But if you've done your homework and defined your edge, you know the long-term result. Trust the process. Think in series. Think in probabilities. This shift in thinking doesn't just transform your trading, it transforms your life. Suddenly, you start approaching decisions with patience and perspective. You stop needing certainty to act. You become less reactive, more strategic. You start playing the long game in your finances, your goals, and your growth. And that is the foundation not only of trading success, but of success in any high-pressure field. So take a breath, zoom out, and remind yourself,
it.
the market doesn't owe you anything. It only gives you probabilities. And when you learn to play those probabilities like a pro, with discipline, with consistency, and without emotional interference, you put yourself in the small group of traders who win over the long term. Not because they're always right, but because they finally stopped trying to be. Section 4. The Trader's Edge. In the chaotic world of trading, where price movements can feel random, news can spark emotional storms, and market sentiment shifts in an instant. One thing separates the winners
I
from
don't
the
think there's
rest:
anything left to
the
do on your
edge.
study for today.
Your trading edge is not just a strategy or a tool.
There's no
It is a
point.
combination of your system,
This is
your
done.
mindset,
I'm
and
still
your
in it though.
discipline. It's what allows you to make consistent profits over time, even in the face of losses, volatility, and uncertainty. Mark Douglas, in Trading in the Zone, emphasizes that having an edge is the foundation of professional trading. Without it, you're not trading, you're gambling. Let's break this down. Your edge is what gives you a slight statistical advantage in the market. It doesn't mean you'll win every trade. It doesn't guarantee instant results. But it does mean that over a series of well-executed trades, following your system with unwavering discipline, you will come out ahead. Think of it like counting cards in blackjack. You're still going to lose some hands. But if you stay focused, manage your risk, and stick to your process, the edge will eventually show itself. It's not about magic. It's about math, consistency, and mindset. Many traders believe that the secret to success lies in finding the perfect indicator or the newest algorithm. But the real secret is far more grounded. It's in the commitment to mastering one approach, one setup, and executing it over and over again with laser-like focus. And here's the truth: most traders don't want to hear. An edge doesn't have to be complex to be effective. In fact, most of the time, simple edges outperform complicated ones. What matters is not how flashy your system looks, but how consistently you follow it. Take the story of Ben, a trader who once chased every shiny new strategy that came his way. He jumped from MACD crossovers to Elliott waves, from breakout patterns to Fibonacci retracements. He watched YouTube videos late into the night, purchased expensive courses, and overloaded his charts with indicators. And yet, despite all this effort, he remained inconsistent. One month, he'd make a decent profit. The next, he'd give it all back and more. His equity curve looked like a roller coaster, and his confidence was crumbling. Then, out of frustration, Ben decided to simplify. He stripped his charts down to the bare minimum and focused on just one thing: a simple moving average crossover strategy. It wasn't flashy, and it didn't win every time. But it had rules, it had structure, and it made sense to him. He back-tested it across months of historical data, saw a consistent 55% win rate, and started trading it with real money. The results weren't explosive, but they were stable. He followed the same setup day after day, managing his risk, staying emotionally neutral, and trusting the process. Within a year, he had become profitable, not because the strategy was genius, but because he had defined his edge and followed it with unwavering discipline. That's what having a trading edge is all about. It's not about guessing right more often. It's about
Bullish
creating a
day in the
system where
market,
you
man.
don't need to guess,
Speed.
where you enter a trade
Heh.
not based on feelings, but on data, patterns, and probabilities. And when you lose, and you will lose, it doesn't rattle you, because you understand that losses are part of the
Let me see if
edge.
I can
They're
get
already
speed
factored
emoji.
into your plan. So, how do you develop your edge? Start with clarity. What's your strategy? Are you a trend trader, a mean reversion trader, or a breakout
Yeah.
trader? What time frames do you trade? What indicators or price action signals do you use? Get specific. Write it down. Your trading plan should include entry criteria, exit rules, stop loss placement, and position sizing. Remove all ambiguity, because the more specific your plan, the easier it becomes to follow under pressure. Once you have your plan, backtest it, look at historical charts, identify setups that match your criteria, track the results, see how it performs across different market conditions. Backtesting won't tell you everything, but it gives you a foundation of confidence. It tells you,
Already
yes,
gone through
this
two
works over
extensions.
time, and once you see that edge in
Like the
action,
market is damn near
it
done
becomes
for the
easier
day.
to
Like,
trust it.
no cap.
Now, here comes the hard part. Don't deviate. The market will tempt you.
Keys up.
A news spike will challenge
You
your
don't want
image.
any
A string of losses will
higher
whisper
BGs.
that your edge is broken. But unless the market itself has fundamentally changed, your edge is likely still intact. Deviating from your plan because of short-term results is how traders destroy consistency. Remember, a good edge includes losing trades. The key is to execute your edge flawlessly, even when it doesn't work out. That's what builds long-term profitability. Mindset and discipline are the glue that holds your edge together. Without them, even the best system will fail. You must treat trading like a business, not a casino.
One,
Every
oh,
trade is a transaction, not a test of your ego. Detach emotionally from the outcome. Stick to the plan. Review your trades, not just for wins and losses, but for execution. Did you follow your rules? Did you let emotions creep in? These are the real performance metrics that matter. It's also important to refine your edge over time. The market evolves, and so should your approach. But refine intelligently, not impulsively. Don't throw out your system after a losing streak. Instead, review your data, look for patterns, and adjust based on evidence. Evolution, not panic, is how you grow as a trader. So here's your challenge. Have you clearly defined your edge, and do you follow it without fail? If the answer is no, it's
fast.
time to stop trading and start building. You can't expect consistent results from inconsistent behavior.
I did look for a
Define
spade
your
emoji.
edge, test it, build trust in it, and then execute it with the discipline of a professional. Because when you have an edge and you honor it, you no longer need luck. You just need time, patience, and commitment. Trading isn't about brilliance, it's about consistency. And consistency comes from having an edge you believe in and the emotional strength to follow it, even when the market tests your resolve. This is where real transformation begins, not in finding the Holy Grail strategy, but in becoming the kind of trader who can follow a simple plan with discipline and confidence, day after day. When you have that, the market becomes less of a mystery and more of a mirror that reflects your reliability,
One, oh.
your emotional control, and your trust in your edge. So take the time to build it, protect it, and trade it with the confidence of someone who knows exactly what they're doing. Not
Spade.
because they can predict the market, but because they've mastered themselves. Section 5. The importance of consistency.
I
In trading, consistency is not just a nice-to-have trait. It is everything.
have to listen to
It is the bridge
Frozen
between
in the
learning
zone.
knowledge and producing results. Too often, traders search for better indicators, faster platforms, or the next secret strategy, thinking these external tools will bring them success. But the harsh truth is this: the real edge, the real breakthrough, lies in consistency. As Mark Douglas teaches in Trading in the Zone, consistency doesn't come from knowing what the market will do next. It comes from learning how to behave the same way in every situation, regardless of what the market is doing. It comes from executing your process flawlessly, every single time. Consistency begins with the understanding that trading is a game of probabilities. You do not control the outcome of any single trade, but you do control your behavior, your decisions, and your execution. The goal, then, is not to be right all the time. It is to be consistent in how you engage with the market. Every time you abandon your rules, skip your preparation, or let emotions dictate your trades, you chip away at your ability to grow. It's like trying to build a house on a foundation that shifts daily. Inconsistent actions breed inconsistent results. And in the long run, that's a recipe for disaster. Let's be clear. Consistency is not easy. It requires discipline, self-awareness, and mental toughness. It means showing up to your trading desk with the same level of focus, whether you're on a winning streak or a losing streak. It means following your trading plan even when it feels uncomfortable. It means logging your trades, reviewing your performance, and learning from your behavior, not just your outcomes. Most traders can do this for a few days, but the truly successful ones do it every day, year after year, rain or shine, win or lose. Consider the story of Lucas, a trader who struggled for years before finally achieving real success. At first, Lucas was like many others, excited by potential profits, hungry for fast wins, and constantly switching strategies. One month he'd follow candlestick patterns, the next he'd dive into scalping. His emotions were on a roller coaster. A win made him feel invincible. A loss sent him spiraling. Then, one day, after a particularly painful drawdown, he had a breakthrough. He realized that it wasn't the market that needed to change. It was him. He decided to commit to one simple setup, a pullback entry on a trending stock using the 20-day moving
To
average.
get an
That was
IMBG
it.
here or look to
He
sell.
wrote down every rule: entry signal, stop loss, target, risk per trade. He created a morning ritual, reviewing charts,
I was
meditating
about to
on
get to the
focus,
30 minute
and visualizing
and
disciplined execution. For the next 12 months, Lucas made the same type of trade every single day. The market gave him the setup. He didn't overtrade. He didn't chase. He didn't skip steps. And the results? They weren't explosive, but they were consistent. His equity curve began to rise slowly and steadily. His confidence grew, not because he won every trade, but because he trusted himself to act consistently. He became less reactive, less emotional, and more focused. Trading stopped feeling like chaos and started feeling like rhythm. His success didn't come from predicting the market. It came from
LGTV. What's
showing
that?
up as the same trader every day. This is the power of consistency. It creates stability in an environment that is inherently unstable. It builds emotional resilience. It builds trust in your system, in your process, and in yourself. And it makes your edge work. You see, even the best trading system in the world is useless without consistent execution. The market doesn't reward potential. It rewards discipline and follow-through. So how do you cultivate
IG.
consistency in your trading? First, define your rules. Get clear on your edge. Write out your entry criteria, your risk parameters, your exit strategy. Make it so specific that there's no room for interpretation. If you're making decisions on the fly, you're not trading, you're gambling. Your rules are your anchor. They keep you grounded when emotions threaten to pull you off course. Second, create rituals. Rituals are powerful because they train your
Yeah, you
brain
can see
to shift
FTX
into a
ready to
focused,
cook up, man.
professional mindset.
It might
Maybe
go
it's
long.
reviewing your journal in the morning, or taking 5 deep breaths before placing a trade, or checking off a pre-trade checklist. These small, consistent actions create a routine, and routine builds discipline. Discipline, in turn, leads to consistent execution. Third, manage your emotions. Emotional trading is the enemy of consistency. Fear,
I'm gonna start
greed,
buying SPX now
overconfidence,
too.
and revenge can all sabotage your
Pull back
process
a
in
little bit.
seconds. That's why emotional awareness is critical. Journal your feelings before and after each trade.
Nevertheless, we
Notice
got
patterns. Do certain triggers throw you off? Does a losing trade make you
I am
tighten
trying
your
to be a
next
picker,
stop
man.
loss irrationally? Awareness leads to control. The more you understand your emotional tendencies, the better you can stay neutral and stick to your plan. Fourth, track everything. Keep a detailed trading journal, not just of your trades, but of your decisions, thoughts, and behaviors. Over time, this data becomes gold. You'll begin to see what works, what doesn't, and where you're drifting. Most importantly, you'll hold yourself accountable. It's easy to lie to yourself when there's no record. But when everything is on paper, you confront your reality. And that's where real growth happens. Now, let's address the challenge that many traders avoid. Are you truly consistent? Or do you only follow your plan when it feels good? This is the mirror you need to look into. It's easy to be disciplined when things are going your way. But what about after a big loss? Or when you're frustrated, tired, or tempted by a quick win? Consistency is not tested in comfort. It's tested in discomfort. It's forged in the moments when you want to abandon your plan, but choose not to. The goal is to become a trader who acts based on principle, not emotion, who follows a process, not feelings, who shows up the same way whether the last trade was a win or a loss. That's the level of professionalism that leads to long-term success.
62.
And the only way to get there is through relentless consistency. Mark Douglas reminds us that the market is not out to get us. It simply reflects our ability to stay disciplined. If you want consistent profits, start with consistent behavior. It's not glamorous, it's not exciting, but it works. Every day you choose discipline over impulse, you move closer to becoming the trader you aspire to be. So, set your rules, build your rituals, control your
Let's get this
emotions, log your
fucking money.
trades, and most importantly, be honest with yourself. Because in trading, as in life, success doesn't come from doing the right thing occasionally. It comes from doing the right thing
Voila.
consistently, over and over, until it becomes who you are. Section 6. Fear and Emotional Control. Fear is the silent saboteur in trading, the invisible force that sneaks into your mind and cripples your ability to think clearly, act decisively, and follow your plan. It is the number one enemy of profitable trading. Fear doesn't just manifest as a trembling hand before entering a trade. It disguises itself in hesitation, second-guessing, early exits, trade avoidance, revenge trading, and clinging to losers. The impact of fear is subtle, yet devastating. As Mark Douglas powerfully explains in Trading in the Zone, fear disrupts the trader's edge by breaking the connection between consistent execution and long-term profitability. You can have the most well-tested strategy in the world, but if you are paralyzed or manipulated by fear, it will be impossible to apply it with discipline and consistency. What makes fear so dangerous is its ability to override logic. Fear lives in the primal brain, in the limbic system, which responds faster than our rational thinking brain.
Let's see this
It's
thing die,
designed
man.
to keep us alive, not help us trade.
Good crash.
This creates an inner conflict. You know
Big
you should
crash.
hold the trade longer to let it hit your target, but your heart races and your hand rushes to take profits too early. You know your setup is
I don't know
valid,
about you, but I'm
but you delay the entry, waiting for extra
I
confirmation
see that
before
higher
moving
VG there
out.
though.
You know the stop loss is in place, but the fear of loss keeps you from pulling the trigger at all. This kind of fear-driven behavior leads to inconsistent
The
results.
new 4 hour
And
candle
in the
random.
world of trading,
That's
inconsistency
why
is
this
the
didn't
fastest
close
way to
below this.
failure.
So now
To
we need
become a
this candle to
successful
close
trader,
below to set
you
the
must
stage.
rewire your
But
relationship with
still start to
fear.
run on this new
That
4 hour
doesn't
candle.
mean you'll never feel it again. It means you'll learn how to act in spite of it. You'll recognize the emotional signals
Whereas if you
and
go
still
regular
follow your
trading,
plan. And the best way to do that is through exposure therapy,
4 hour candle is still
a
open.
deliberate, gradual process of confronting your fear through small, controlled trades. Like training a muscle, emotional control is built through repetition under pressure. The more often you take well-defined, rule-based trades, the more you train your nervous system to remain calm in uncertain environments. You shift from reacting emotionally to responding with intention. Take the story of Amanda, a trader who struggled for years with fear of loss. Every time
Not
she
failing to
experienced
close
a
below the
drawdown,
midpoint.
she would pull back, hesitate, and sabotage her system. She knew her setups worked on paper, but in live markets, she couldn't bring herself to execute them. Her fear of losing money was so intense, it paralyzed her. Finally, a mentor gave her a challenge. Trade micro size for 30 days, every day, no matter what, and follow her rules without fail. The focus was not on making money. It was on following the process. Amanda started trading with only a tiny amount at risk, just enough to feel some emotion, but not enough to trigger panic. At first, she still felt fear, sweaty palms, racing thoughts, but she
I
took
really
the
want
trades
DD for
anyway.
highs on SPX.
Some were losses, some were wins, but she followed the rules to the letter. Slowly, something shifted. Her body stopped overreacting. Her confidence grew. She began to trust her system again. She wasn't trying to win anymore. She was trying to stay consistent.
See the amount
That
of
gave her control.
confluences that
By
are in
the
this
end of the
area.
30 days, she had transformed.
So many.
She wasn't
Need to
fearless,
expand away from here,
but she was
like they're
courageous.
doing right now.
She could act despite fear. That made all the difference.
Nasdaq,
This is how you beat fear
see the
in trading.
IFVG.
Not by avoiding it,
Though,
not by
I don't know how I
suppressing it,
feel about those right
but by
now.
facing it head on in small, repeated doses. Just like a person afraid of
AO
heights
Asia
learns to stand
extensions.
near windows, then on balconies,
So
then finally
minimum
make
now
an
for
elevator
Nasdaq.
to the
We got
top of a
midpoint of the
skyscraper.
daily range for today.
You build your emotional
So we're already
tolerance over
there.
time. Start with trades
Um,
so small they feel safe, but stick to your system. Make execution, not outcome, your only metric for success. Over time, you'll recondition your brain. You'll replace panic with presence, hesitation with action, chaos with calm. But let's go
Bad
deeper.
boy on the other hand.
Why does fear take hold in the first place? For most traders, fear is rooted in attachment. Attachment to money, attachment to being right, attachment to avoiding pain. You're afraid to lose because you think loss equals failure. But trading is not
Let
about
me go
avoiding losses.
demo.
It's about managing them. Losses are part of the game. Even the best strategies lose 30% to 40% of the time. If you make loss your enemy, you will always fear it. But if you see it as the cost of doing business, no different than rent or expenses, you remove its emotional charge. Mark Douglas urges us to think in probabilities. When you truly understand that any single trade is just one in a series, and that your job is to execute a repeatable edge over time, fear begins to dissolve. You stop obsessing over this trade and start focusing on the next 100 trades. You trade with detachment. You trade with clarity. You stop trying to avoid discomfort and start building endurance. To master emotional control, you must also create a supportive structure. This means having a trading plan that removes discretion and guesswork, clear entry and exit rules, fixed position sizing, a pre-market routine that centers your mind, a post-trade routine that reinforces discipline. All of this creates a container for your emotions. It turns chaos into order. When emotions spike, and they will, you fall back on the process. It also helps to track your emotional responses. After every trade, log not just what you did, but how you felt. Was there fear, hesitation, relief, anxiety? Over time, you'll start to see patterns. You'll notice triggers. Maybe you get fearful after a losing streak. Maybe you hesitate more on Mondays. Awareness is the first step toward control. You can't
Get this
fix what
demo
you don't
sales
know.
going, man.
Here's the ultimate challenge.
Give
What
it a
is your
second.
biggest fear in trading, and how can you face it this week? Is it fear of loss? Place 5 micro trades that follow your rules exactly,
Or
no matter
failing to
what.
close below the
Is it
midpoint.
fear of missing out?
That's what I don't like right
Write
now.
down your setups and wait for perfect alignment before entering. Is it fear of being wrong? Reframe your thinking. Losses don't make you wrong. They prove your system is working in probabilities. Don't run from fear. Walk straight into it, not recklessly, but methodically. Fear never disappears completely, but it loses power when you stop avoiding it. When you train your mind and body to stay steady, you reclaim control. You become the kind of trader who acts on logic, not emotion. The kind who sticks to the plan, no matter the noise. The kind who thrives in uncertainty, because you know that your power comes not from controlling the market, but from controlling yourself. In the end, trading is not about being fearless. It's about being fearless enough to follow your plan when everything inside you says don't. That's courage. That's mastery. That's what separates the amateurs from the professionals. Fear may always be part of the game, but it doesn't have to run the show. Let your process
They
lead.
don't want to give us these
Let your
sales.
rules guide. And let fear fade into the background where it belongs.
Where's 11 of it?
Section 7. The illusion of control. One of the greatest traps that traders fall into is the illusion of control. The mistaken belief that, with enough analysis, indicators, or adjustments, they can somehow control what the market will do next. It's a seductive lie. It whispers promises of certainty and predictability in a world that is fundamentally uncertain. But the hard truth is this: no matter how skilled you are, no matter how sophisticated your strategy, you cannot control the market. You can only control how you respond to it. And the sooner you internalize this truth, the sooner you'll free yourself from the frustration, stress, and self-sabotage that come from fighting against reality. Trying to control the market is like trying to control the wind. You can prepare, you can anticipate, you can position your sails, but you can't dictate its direction or speed. Yet, so many traders live in a constant state of tension, anxiety, and disappointment because they keep expecting the market to bend to their will. When it doesn't, they blame their strategy, tweak their indicators, or abandon their edge altogether. This reactive mindset destroys consistency. It keeps them chasing perfection instead of practicing discipline. Mark Douglas makes it crystal clear in Trading in the Zone: successful traders are not focused on predicting the market. They're focused on executing their process with flawless discipline. They have accepted deeply and completely that they have no control over outcomes. This acceptance liberates them. They no longer need the market to behave a certain way in order to feel successful. They feel successful because they followed their rules. They measure progress not by wins or losses, but by how well they stuck to their process. That mindset shift, from outcome to process, is what separates amateurs from professionals. Let's look at an example. Meet Jason, a new trader who came into the markets with ambition and a spreadsheet full of strategies. He back-tested obsessively, watched every YouTube tutorial, and convinced himself he had developed the perfect system. On his first few trades, things went well. But then came a string of losses. Suddenly, doubt crept in. Maybe his moving averages were off. Maybe his stop loss was too tight. He began adjusting parameters after every losing trade. A few days later, another loss and another tweak. His indicators got more complex, his charts messier, his confidence weaker. He was chasing control. He believed that if he could just fix the system, he could eliminate losses. But losses are not problems to be fixed. They are inevitable. Even with a solid edge, you'll still experience drawdowns, losing streaks, and trades that go against you. Jason's mistake was not in having a losing trade, it was in believing he could prevent them through constant tinkering. By trying to control outcomes, he abandoned
Yeah.
his process.
Nice.
The result? More losses, more stress, more confusion.
I hate this
He didn't
expectation
realize that his
thing.
greatest power wasn't in predicting the
So
market,
just get
but in managing himself. The illusion of control
pretty
doesn't
weak point.
just sabotage strategy, it drains your emotional energy. It creates unrealistic expectations and puts you in constant conflict with the reality of how markets behave. You start feeling like every loss is a personal failure. You obsess over every trade, looking for market
Demo,
randomness.
please. Oh,
You micromanage your positions, hoping you can will them to hit your target. This mindset is not only exhausting, it's destructive. But what happens when you let go of control? When you stop trying to force outcomes and instead commit to executing your plan with discipline? Something powerful happens. You become calm. You become focused. You stop chasing the market and start responding to it. You trade with acceptance. You begin to see losses not as threats, but as part of the process. You stop panicking when things don't go your way because you've detached your identity from the outcome. You're no longer trying to be right. You're trying to be
yeah,
consistent.
yeah. If you're long,
This
hold your lungs,
is
man.
not weakness.
I'm
It's
trading
strength.
demo at this point. So
It's the strength to say, I don't know what the market will do next, but I know exactly what I will do in response.
just don't think we're
It's
gonna
the
keep
confidence
expanding
to
for the
trust
day.
your edge, even when the results are temporarily unfavorable. It's the maturity to know that mastery comes not from control, but from alignment with reality. This is where real power in trading lives, not in forcing the market to behave,
Yeah, bro.
but in behaving correctly, regardless of what the market does.
At
So, how
least I
do you
want to see
start
the
shifting
midpoint of
away from the
the
illusion
first
of
30-minute
control?
candle.
First, by
I
redefining
want
what
price to
success
come
looks
here at
like.
least.
If success is only measured by profit, you will always be on an emotional roller
Because that's
coaster.
where I would have
But
wanted
if success
pullback
is
to
measured
continue
by
to go long.
execution,
So if I
by
wanted to
how
go long, it would
faithfully
be
you followed your plan, you give yourself a stable, empowering metric. Did you enter according to your rules? Did you manage risk correctly? Did you exit based on your plan, not your emotions? If the answer is yes, then you succeeded, even if the trade was a loser. Second, keep your trading process simple and systematic. Complexity creates the illusion of control. The more indicators, filters, and variables you add, the more you feel like you're doing something to improve outcomes. But in truth, complexity often breeds confusion and
started max.
hesitation. A simple, rule-based approach, executed with consistency, will always outperform a complex system driven by fear and second-guessing. Keep it clean. Know your edge. Stick to it. Third, develop emotional rituals that reinforce your detachment from outcomes. This might include journaling after every session, where you rate your execution rather than your results. It might mean reading your trading plan aloud before the market opens to anchor your focus, or using breathing exercises before
Uh,
placing a trade to center yourself in the present moment. These small habits build emotional discipline. They remind you that your job is not to win trades, it's to follow your process faithfully. Finally, embrace randomness. The market is a game of probabilities, not certainties. Each trade is just one of many in a long series. It's not about the next trade, it's about the next 100 trades. When you truly internalize this, you stop obsessing over what happens next. You begin to see each trade as a data point, not a judgment of your skill, not a reflection of your worth, but part of a larger statistical picture. This is the mindset of the pro, detached, disciplined, and process focused. So here's your challenge for the week. Can you surrender the need to control? Can you let
Honestly, if
go
you're in your buy,
and
just hold
focus
it, yeah?
only on
If you're
executing
in
your
your buy,
plan?
hold it.
Can you trade with the mindset that your only responsibility is to act in alignment with your edge? Write down what parts of trading you try to
Already
control,
caught the buys
what are
this morning.
actually
So
outside your influence, like market direction, news events,
what was
or
that?
trade outcomes. Then write down what is within your control,
Happened.
your strategy, your risk, your execution, your emotions. Commit to focusing only on those. Let the rest go. When you do, you'll feel lighter, clearer, more resilient. The
All right.
market won't feel so threatening anymore because you'll no
What's their
longer be
business?
fighting it.
It's a
You'll be
demo
flowing
account.
with
Where
it.
I going?
And that's when you truly enter the zone, not because you control the market, but because you finally control you. Section 8. The zone. Flow state in trading. There is a state of mind in trading where everything feels effortless. Decisions flow naturally. Emotions are silent. Time seems to disappear.
As you can see, we did
You see
not
the
turn out
market
the
clearly,
IFVG.
respond instinctively, and execute your trades
Didn't
with
close below the
absolute
gap, so
confidence and
that's
ease.
why we have this push.
This state is what elite traders call being in the zone. It's not a myth.
The candles
It's not
tell the story.
reserved for a lucky few. It is a real, repeatable, and powerful mental space
But
where your
where does
skill,
price even want to go for the
preparation,
day?
and mindset come together in
Previous
perfect
daily high,
harmony. And when you're in the zone,
sorry,
trading
Monday
becomes
high.
more than just buying and selling. It becomes a form of mastery. Being in the zone is often described as a flow state. Psychologists define it as the optimal experience where you are fully immersed in what you're doing, deeply focused, and performing at your peak. For traders, this means acting without hesitation, trusting your analysis,
I don't know why
and
Trade of
following your
Eight will be
rules
putting
without the
limits on
interference of fear, greed, or doubt. It's
a
where your
fucking
conscious mind
challenge.
gets
I'm
out of
sorry,
the way and your
practice
trained
account. Like just
intuition takes over. This is not about luck or guessing. It's about accessing your highest level of competence and clarity. Why does trading in the zone matter so much? Because markets are chaotic by nature, and your mind must be still in the face of that chaos. The zone allows you
stop
to
me
stay
now.
calm while others panic, to act
Stop me now. I got
decisively when
equity.
others hesitate,
One bar ask
and to manage risk with discipline
400
while
left.
others chase profits. It's the difference between reacting emotionally and responding with clarity. When you're in the zone, you don't second guess yourself. You don't get attached to outcomes. You are simply present, fully engaged with the task, and flowing with the market rather than fighting it. Reaching this state consistently is not about being perfect. It's about preparation and presence. You can't force the zone, but you can create the conditions for it to emerge. One of the most powerful ways to do that is by eliminating distractions. Trading in a noisy environment, whether physical, emotional, or digital, pulls your mind in 100 directions. You can't focus deeply if you're constantly checking the news, scanning social media, or jumping between multiple indicators. The first step toward the zone is simplification. Reduce the noise, streamline your charts, mute unnecessary tabs, create a clean, focused workspace that invites calm rather than chaos. Another key to unlocking the zone is reducing overthinking. Many traders paralyze themselves by analyzing too much, too fast, right before placing a trade. They hesitate, tweak their entries, second guess their stops, or wait for one more confirmation. This kills flow. The truth is, if you've done your preparation, you don't need to reanalyze every moment. You need to trust your system. Flow state thrives on trust. Trust in your plan, your edge, and yourself. If your strategy is well tested, your only job in the moment is to execute it. Thinking less, not more, is often the key. Let's look at the story of Daniel, a veteran trader who has been in the markets for over 2 decades. Early in his career, he did what most new
Sharp,
traders do. He tried to absorb everything:
sharp.
multiple monitors,
You see me?
constant news updates, Twitter feeds, CNBC in the background. He thought more information would give him more control, but it didn't. It just made him anxious. Then one day, after a string of stressful trades, he turned everything off. No news, no commentary, just his charts and his strategy. That day, he felt something shift. His mind quieted. His actions became
Well,
fluid.
no, you know, see balance.
Missing headlines, he was just trading his setup, calmly and confidently. He had entered the zone. Since
We
then,
feel real
Daniel has
50K.
developed a
No,
ritual before every trading session. He reviews his plan. He breathes deeply for 2 minutes. He checks his environment, quiet, minimal, distraction-free. Then he
like,
begins. No talking, no reacting, just observing and executing. For him, trading has become a form of meditation. He doesn't chase the zone, it comes to him because he's created the space for it to arrive. So how can you start trading in the zone? Begin by preparing before the market opens. Review your plan, identify key levels, and know what setups you're looking for. This preparation removes guesswork and anxiety during live trading. Next, build rituals that center your mind. This could be deep breathing, a short walk, or even listening to calming music. Anything that quiets your internal noise and brings you into the present moment. Then, eliminate distractions. Turn off notifications. Close extra tabs. Keep only what you need to trade. Your environment should support focus, not fragment it.
first hour of trading
Another
is coming
powerful
up now,
practice
so
is visualization. Before you trade, visualize yourself following your rules with
pull back
calm
definitely.
confidence. See yourself managing a losing trade with discipline. Feel the rhythm of the market. This mental rehearsal trains your brain to respond instinctively under pressure. Over time, it becomes second nature. You don't just know what to do, you feel it in your bones. That's flow. And of course, journaling is essential. After each session, reflect on your state of mind. Were you present? Did you hesitate? Were you distracted? What pulled you out of the zone? What helped you stay in it? These insights will help you identify your personal triggers and refine your process. Over time, you'll discover your own rhythm, your own path to the zone. The biggest enemy of flow is emotional attachment to outcomes. If you're obsessed with the result of each trade, you'll never be free enough to flow. Fear of losing or needing to win ties your ego to every position. To truly enter the zone, you must let go. You must trust the probabilities, accept the uncertainty, and release the need to control the result. Paradoxically, this surrender gives you the greatest power, because now you're not forcing the trade. You're allowing it to happen, guided by clarity, not emotion. So here's your challenge. Can you create an environment and mindset that helps you trade in the zone? Take inventory of your current setup. What's pulling your attention away? What noise can you eliminate? What rituals can you introduce to enter each session with presence and focus? Start small. Remove one distraction. Add one habit. Take one step closer to stillness. The goal isn't to become robotic. It's to become fully present. Because in the zone, trading is no longer about struggle. It's about flow. It's about aligning with the market instead of fighting it. It's about making decisions not out of fear, but from a place of calm, centered awareness. And once you've tasted this state, you'll never want to go back. Because this is where trading becomes more than just profitable. It becomes art. It becomes mastery. It becomes you, fully alive in the moment, doing exactly what you were trained to do, without hesitation, without noise, without fear. That is the power of trading in the zone. And it's not a dream, it's a skill, one you can build one day, one trade, and one decision at a time. Section 9. Confidence versus euphoria. In trading, confidence is essential. Without it, you hesitate, you second guess, and you fail to execute when it matters most. But there's a very thin line between confidence and euphoria, a dangerous, seductive state that often masquerades as confidence but leads to reckless decisions and painful losses. Knowing the difference between the two can be the dividing line between sustainable success and catastrophic failure. Real confidence is grounded in discipline and self-awareness. Euphoria, on the other hand, is an illusion, a temporary high that blinds you to risk and lures you into thinking you're invincible. Confidence is earned. It is the quiet strength that grows through experience, consistency, and the ability to follow your plan under pressure. It doesn't need to announce itself. It's not loud or flashy. It's a steady belief in your system, your preparation, and your ability to manage whatever the market throws at you. When you're truly confident, you respect the market. You know that every trade carries risk, and you're prepared for both the win and the loss. You act, not react. You stick to your process, regardless of how many trades you've won or lost. Euphoria, however, is different. It comes rushing in after a streak of wins or a big score. It convinces you that you've figured it all out, that you can't lose, that the market is yours to conquer. And that's when it strikes. You begin to abandon your rules. You increase your position sizes without justification. You stop managing risk because you're sure of the next trade. You tell yourself you're just being confident, but in truth, you're caught in a trap. The very emotions that feel like success are quietly setting you up for a fall. Consider the story of James, a young trader who had recently mastered a breakout strategy. After months of study and simulation, he finally went live. In his first few weeks, he executed perfectly, following his plan, keeping his risk tight, and walking away with modest but consistent gains. Then one week, everything clicked. 5 trades, 5 wins, each one cleaner and more profitable than the last. James was elated. He began to believe he was on a roll, that he had tapped into something special. On the 6th trade, he doubled his position size. It worked. More profits. Then he tripled it. Another win. Euphoria had taken over. He felt unstoppable. But markets don't reward arrogance. On the 8th trade, he went all in, convinced he saw the same setup, ignoring warning signs, dismissing his usual risk parameters. The trade turned against him fast. He froze, unwilling to cut the loss, sure it would turn around. It didn't. He wiped out not just his profits, but a significant chunk of his original capital. What stung the most wasn't the money. It was the realization that he hadn't been confident at all. He'd been euphoric, and that euphoria had blinded him to the discipline that brought him success in the first place. This is the cycle many traders fall into. A few wins lead to excitement, then overconfidence, and finally, disaster. It's not the wins that are dangerous. It's what you do after the wins. Euphoria whispers lies, that you've figured it all out, that risk no longer matters, that the market owes you. But the market owes you nothing. It rewards discipline, not delusion. And if you don't recognize when you're slipping from confidence into euphoria, you'll eventually learn the hard way. So how do you protect yourself? The first step is awareness. Learn to recognize the signs of euphoria. Are you increasing position sizes impulsively? Are you ignoring your trading plan? Are you brushing off risk management because you just know this trade will work? These are all red flags. Real confidence doesn't need bigger positions or emotional highs. It's quiet. It's steady. It trades the same way after 5 wins as it does after 5 losses. One powerful practice is maintaining a post-trade reflection habit. After each session, ask yourself not just whether you won or lost, but how you traded. Did you follow your rules? Were your decisions based on your strategy or your emotions? Did you size appropriately, or did you gamble? This kind of honest review keeps your ego in check. It allows you to catch yourself before euphoria sets in, and it reminds you that process is always more important than outcome. Another tool to stay grounded is to cap your wins. It might sound counterintuitive, but setting a daily profit limit can prevent you from overtrading when you're feeling unstoppable. When you hit your target, walk away. Don't try to squeeze more from the market just because you're in a good mood. Remember, your goal is consistency, not adrenaline. Walking away after a win is a powerful display of control and true
Gonna end
confidence.
stream at 11.
Journaling your emotional state is another critical habit. After each trade, note not just what you did, but how you felt. Excited, anxious, overconfident, detached. Over time, you'll start to see patterns. You'll learn to recognize when confidence starts to morph into something more dangerous. And once you can name it, you can manage it. It's also helpful to stay connected to the idea that the market is always bigger than you. No matter how many wins you've had, the market can and will humble you. It's not personal, it's just reality. Humility is a trader's best armor against euphoria. When you stay humble, you remain open to learning. You respect the risk. You understand that success today doesn't guarantee success tomorrow. And most importantly, you remember that discipline, not emotion, is your true edge. Finally, surround yourself with accountability. Talk to other traders. Share your wins and your struggles honestly. Sometimes, just speaking your thoughts out loud will help you realize when you're getting carried away. A good trading community will celebrate your wins, but they'll also remind you to stay sharp, stay grounded, and stick to your rules. And that kind of feedback can save you from the dangerous spiral of overconfidence. So, here's the challenge. Are you truly confident or just euphoric? Take a moment to reflect on your recent wins. Have you changed your behavior? Are you sticking to your plan or letting success cloud your judgment? Be honest, because the best traders aren't the ones who win the most. They're the ones who stay grounded the longest. They resist the urge to chase highs. They stay disciplined when emotions flare. And they trade not from excitement, but from clarity. Confidence is a powerful force. It empowers you to act, to trust, and to grow. But only when it's built on the solid foundation of preparation, risk management, and humility. Anything else is just euphoria in disguise, and it will betray you the moment the market turns. Choose real confidence, stay disciplined, and when you win, smile, but stay focused. Because in this game, it's not about how high you rise, it's about how well you hold your ground. Section 10. Reinventing your identity. In trading, one of the most overlooked yet critical shifts isn't technical, it's personal. It's the transformation from someone who hopes to win to someone who expects to win because they've become the kind of person who consistently shows up with discipline, patience, and resilience. This is the work of identity. If you want lasting success in the markets, you have to reinvent your identity to match the results you seek. You can't just act like a trader. You must become one from the inside out. Every action you take is a vote for the kind of person you believe yourself to be. If you keep breaking your rules, sabotaging your progress, or chasing quick wins, it's not just a strategy issue, it's an identity issue. Somewhere in your self-concept, you don't yet see yourself as a consistent, successful trader. And if your internal identity doesn't align with the behaviors that success demands, then even your best strategies will eventually break down. Because who you are will always override what you do. The mind runs the show, and unless you change how you see yourself, you'll always revert to old habits. This is why traders often find themselves repeating the same destructive cycles. They'll build a system, make progress, even string together some wins, but eventually, their old identity creeps back in. Maybe they still see themselves as impulsive, undisciplined, or unlucky. Maybe they carry self-doubt, fear of failure, or a need to prove something. Those internal stories quietly dictate their behavior, no matter how much technical knowledge they've acquired. The market simply becomes a mirror reflecting their internal conflicts. To break free from this, you have to consciously rewrite your self-image. You must craft an identity that supports the trader you want to become. This isn't just about wishful thinking, it's about practicing a new mindset until it becomes who you are. Affirmations are one of the most powerful tools in this process. They're not magic spells, they're statements of intention. They rewire your beliefs through repetition. When you consistently affirm, "I am a disciplined, patient, and focused trader," you begin to act in alignment with that identity. Your mind will look for ways to prove it true. But affirmations alone aren't enough. You also need to visualize your success with clarity and emotion. Mental rehearsal is a proven performance tool used by top athletes, performers, and elite professionals. It allows your brain to simulate successful experiences, which strengthens the neural pathways connected to those outcomes. Close your eyes and imagine sitting in front of your screens, calm and confident. Picture yourself waiting for the perfect setup, executing your trade without hesitation, and managing it according to plan. Feel the pride of walking away from the desk knowing you honored your rules. The more vividly you rehearse this version of yourself, the more natural it becomes to live it. Daily journaling is another powerful practice for identity change. Don't just track trades, track your mindset. Reflect on your thoughts, your emotional triggers, your behavior patterns. Ask yourself questions like, did I show up today as the trader I want to be? Where did I fall short? And what can I learn from it? What identity am I reinforcing with today's choices? Over time, journaling becomes a mirror to your evolution. You'll begin to notice how your language shifts from reactive to intentional, from confused to clear, from doubtful to confident. Let's look at a real example. There was a trader named Elena who spent 3 years in a cycle of boom and bust. She had learned several trading systems and knew all the rules, but she couldn't stay consistent. After every winning streak, she'd sabotage herself, overtrading, getting emotional, breaking risk rules. She couldn't figure out why she kept doing this until she realized she didn't truly see herself as a disciplined trader. Deep down, she still identified as the woman who always made just enough progress to crash again. That identity was stronger than her strategy, so she decided to change it. Every morning, she wrote down her new identity. I am a calm, focused trader who follows my rules without hesitation. She meditated for 5 minutes and visualized herself trading with grace and discipline. She ended each day with a journal entry that asked, did I honor my identity today? At first, it felt fake. She still slipped. But over time, something shifted. She began to feel like the kind of trader who was in control. Her actions aligned. Her equity curve began to reflect the change. She stopped chasing trades and started managing risk like a professional. She wasn't just trading better, she had become better. Her identity had finally caught up to her ambition. And that's the key. You don't become successful through one big leap. You become successful by becoming someone new, one intentional choice at a time. Every time you wait patiently for your setup instead of forcing a trade, you're becoming a disciplined trader. Every time you cut a loss quickly instead of hoping it turns around, you're reinforcing your identity as someone who respects risk. Every time you step away after a good day, Rather than chasing more, you're practicing emotional control. These small actions compound. They build trust with yourself, and over time, they become who you are. This journey of identity change is not easy, but it is essential. You're not just learning how to trade, you're learning how to be a trader. That requires internal transformation. You have to shed the beliefs, behaviors, and mental habits that don't serve you. You have to choose your identity every day, not just when it's convenient. And you have to be willing to grow through discomfort, because true growth always happens outside your comfort zone. So ask yourself this: who are you becoming? What identity are you reinforcing with your current habits and choices? Are you showing up as the trader who wins consistently, or someone still clinging to old patterns? This isn't a question of talent. It's a question of identity. You have the power to become whoever you need to be in order to win, but it requires intention, repetition, and belief. Don't just trade your system. Trade your identity. The market doesn't just test your strategies. It tests your patience, your discipline, your self-image. If you want consistent results, you must become a consistent person. If you want confidence, build a track record of honoring your plan. If you want to win, stop acting like someone who might succeed, and start being the kind of person who already does. This isn't about pretending. It's about evolving. Reinvent your identity, and you reinvent your future. Section 11. The Path to Mastery. Mastery. It's a word that evokes awe. It's the summit every serious trader wants to reach, but few understand what the journey truly demands. In trading, mastery is not defined by a single winning strategy, a large account balance, or a brief moment of glory. It's a way of life. It's the patient, disciplined, and humble pursuit of excellence over time. It's about becoming more than someone who trades. It's about becoming someone who evolves. Mastery in trading, as in life, is not something you conquer. It's something you continually practice, refine, and embody. Many people enter the trading world dreaming of quick riches. They obsess over setups, signals, indicators, and shortcuts. But in time, they all come to the same realization. Trading is not a game of information. It's a game of transformation. What separates those who merely survive from those who thrive is not IQ, education, or access to secret strategies. It's emotional control. It's mindset. It's the relentless willingness to look inward, to face your fears, and to grow through your failures. Mastery begins the moment you stop trying to beat the market and start trying to master yourself. This shift from external to internal focus is profound. Most traders fail because they approach the market as something to conquer. They think success is about outsmarting others or predicting the next big move. But the market is not your opponent. The market is a mirror. It reflects back your mindset, your discipline, your strengths, and your weaknesses. When you realize that the real battle is within, everything changes. You stop asking, "How can I win today?" and start asking, "How can I grow today?" Because mastery isn't a single outcome, it's a continuous becoming. Consider the story of Lucas, a trader who spent nearly 2 decades failing. He blew account after account. He jumped from one system to the next, always chasing what worked for someone else. At one point, he had lost everything: his savings, his confidence, and even his sense of purpose. But in his darkest moment, Lucas made a decision. He would stop trying to master the market and instead master himself. He threw out all the complicated indicators and focused on simplicity. More importantly, he began journaling his emotions, tracking his impulses, and meditating daily. He didn't just learn price action, he learned patience. He didn't just manage risk, he managed his ego. Over time, his results stabilized. His trades became boring, but consistently profitable. 10 years later, Lucas became one of the most respected proprietary traders in his circle. His secret? Radical self-awareness and unwavering emotional discipline. He didn't master the market. He mastered the man in the mirror. That is the true essence of the path to mastery. It's the inner work, the journaling, the reflection, the daily disciplines that builds the outer results. Mastery doesn't come from doing more. It comes from doing the right things consistently, with awareness. It's not about perfection. It's about progress. Every losing trade is feedback. Every emotional trigger is a lesson. Every day you show up with intention is a step forward. Mastery is the quiet confidence that comes from knowing you are improving, even when the results don't show it yet. And here's the part many overlook. Mastery requires emotional neutrality. You cannot evolve if you are constantly judging yourself, comparing yourself, or chasing highs. You have to detach from outcomes and anchor into process. Whether you win or lose, you remain steady. Whether the market is wild or slow, you remain focused. This is not indifference. It's mature detachment. It's the ability to stay grounded in the face of uncertainty. It's the decision to respond, not react. And it's one of the hardest, most rewarding skills you will ever develop. To walk the path of mastery, you must also commit to lifelong learning. Not just technical learning, but personal growth. What are your weaknesses? What patterns keep repeating? What emotional needs are you bringing to the market? Do you use trading to validate your worth? Do you revenge trade when hurt? These questions aren't easy, but they're necessary. The more honest you are with yourself, the faster you'll grow. True masters are not arrogant. They are humble students. They know that the market will always be bigger than them, and that their edge comes from being present, adaptable, and emotionally aware. Take time to review your growth. Look back at who you were a year ago. What's improved? What hasn't? Where are you still making excuses? Where have you become stronger? This kind of reflection builds clarity. It shows you that mastery is not a destination, but a direction. Every time you pause to review your progress, you recommit to the path. You remind yourself that you're not here for short-term results. You're here to evolve into someone who wins long-term. Mastery also requires resilience. You will be knocked down. You will make mistakes. You will face losses that hurt. But those moments are not the end. They are the forge. It's in those moments that your character is shaped. Will you quit? Will you blame the market? Or will you rise, learn, and return with more wisdom? Every master has scars. What makes them different is that they turned those scars into strength. They didn't give up when it got hard. They leaned in. They embraced the challenge as part of the process. And make no mistake, this path is not just about becoming a better trader. It's about becoming a better person. The patience you build in trading makes you more composed in life. The discipline you practice in the markets spills into your health, relationships, and decisions. The emotional control you cultivate helps you navigate conflict, failure, and uncertainty with grace. Trading becomes a training ground for becoming the best version of yourself. The real reward of mastery isn't money, it's character. So pause and ask yourself, what kind of person do I need to become to succeed long-term in the market and in life? Not just what do I need to learn, not just what do I need to do, but who do I need to be? That's the question that unlocks transformation. Do you need to become more patient,